Have you ever felt like the stock market is some kind of secret club, speaking a language you're not meant to understand? Well, today, we're going to crack the code. We're taking the Tel Aviv Stock Exchange and breaking it down into simple, understandable pieces. Let's dive in.
So here's our game plan for today. First, we're going to figure out what the exchange actually is. Then, we'll look at what's being bought and sold there. We'll meet the key players, see how a trade actually happens from start to finish, and finally, we'll cover the single most important first step for you to get started.
All right, first things first. Let's tackle the biggest question of all. What in the world is a stock exchange, and why do we even need one?
I mean, we hear about it all the time on the news, right? But at its core, it's really just a special kind of marketplace, and it has one single purpose that makes the entire financial world go round.
It's what we call a secondary market. Now let me make that simple for you. Imagine a car company building a brand new car and selling it for the first time. That's the primary market. But what happens next? That car gets sold from person to person for years. That's the secondary market. The stock exchange is exactly that, but for pieces of companies, not for cars. It's where existing investments find new homes. And this leads us to its most important job, providing liquidity. That might sound like a complicated word, but it just means making it incredibly easy to sell something you own and turn it back into cash. I mean, think about it. Without the exchange, selling a stock would be a nightmare. You'd have to find a buyer all on your own. The exchange is the system that connects you to millions of potential buyers instantly. It's what keeps money flowing.
Okay, so it's a giant market. Got it. But what's for sale? What are the actual things being traded back and forth?
Everything that gets traded falls under this big umbrella term called securities, or in Hebrew, niyarot erech. The easiest way to think of them is as official financial contracts that give you, the owner, specific rights. But what kind of rights? Well, that totally depends on the type of security you own.
The two main types you'll always hear about are stocks and bonds, and you really need to know the difference because they are worlds apart. A stock, a manea, means you own a small piece of the actual company. You're an owner. A bond, an iggeret chov, is basically an IOU. It's a loan you're giving to a company or a government. You're not an owner, you're the lender.
So let's focus on stocks for a second. When you own a stock, you get three pretty cool things. One, you're a partner. You own a real slice of that company. Two, you get a voice. You can actually vote on big company decisions. And three, you might get a cut of the profits, and those are called dividends.
Now that word might is really the key here. Dividends are like a bonus. The company pays them out when it's doing well. But the interest you get from a bond, that's not a bonus. That's a promise. It's a legal obligation. The company has to pay it. And that's the whole difference between being an owner who shares in the ups and downs versus being the lender who just expects to get paid back.
Okay, so we've got a market and we've got the products. But how do we actually get inside? You and I can't just show up and start buying things. We need to go through the official gatekeepers.
These gatekeepers have a special name, exchange members, or havrei bursa. They are the only ones with a license to play directly in the market. For the rest of us, they are our one and only connection, our gateway to get in on the action.
And let me tell you, it is a very exclusive club. At the Tel Aviv Stock Exchange, there are only about 30 official members. That's it. This tiny group of firms is responsible for handling all the trades for everybody else.
So, who are these players? Oh, you'll definitely recognize their names. We're talking about the major Israeli banks like Discount and Mizrahi, big brokerage firms like Pskagot, and even huge global banks like HSBC and Citi.
So now we know the who, what, and where. Let's get to the really interesting part, the how. How does a trade actually get done in today's super-fast digital world?
Yeah, you can forget all those old movie scenes with traders yelling and throwing paper everywhere. That's history. Today, the stock exchange is a powerful, silent, computerized arena where it all happens in the blink of an eye.
You know, the process is actually pretty straightforward. Here's how it works. 1. You decide you want to buy or sell something, and you place an order with your bank or broker. 2. They instantly send your order to the exchange's giant central computer. 3. That computer acts like a super-fast matchmaker, finding another order that's the exact opposite of yours. And 4, once it finds a match, boom, the deal is done, all in a fraction of a second.
We've covered all the theory, which is great, but now let's make this real. What is the one practical thing you actually need to do to get started?
It honestly all comes down to this one simple thing. You need to open a special securities account, basically an investment account, with one of those exchange members we talked about. That's it. That's your ticket to the game.
So, you see, the stock exchange isn't some secret society. It's just a system, a tool with clear rules, designed to help money move and grow. You now have the blueprint. The only real question left is, what are you going to build with it?